Hi, everybody. Welcome to my second episode of Understand Home Purchasing Guideline and the information for you to buy a house. And the second episode, the main goal is going to be looking at understand your finance, down payment, those major things. So I will have to share my screen so you guys going to see a beautiful screen of my informations. So hopefully everybody can enjoy the little PowerPoint and slideshow. So first thing we want to do is understand your DTI and calculate your down payment. This is very important. You need to understand your what is DTI. Okay, what DTI is including it, why it's mattered. The second thing we want to look at is the down payment. How much do you need for down payment? Additional funds, source of down payment. Number three, the thing you need to know about your cash, because your down payment is your cash, and how you place it and when you put it in it could make difference if your loan go through or not, or a lot more work for you to do or not. So go to understand is your debt to income ratio. What's your debt to income ratio? Total expense divided by the total income equal to DTI. Okay. What's down payment? Down payment is the money you're going to put in for upfront when you're purchasing your house. So, and again, why you need to know. Know your own DTI. Our goal is how to calculate your own DTI and your DTI for the qualification of your loan. Now, DTI. Basically, we all can see everything on your credit report going to end up on your DTI as expense. What that mean? Your credit card monthly payment, not the total amount, monthly payment. Your auto loans monthly payment. Anything reflect on your credit report will be considered is your expense. If you say, David, what happened? I have a co-sign loan, or I help someone co-sign a loan, or a loan that I help my friend, but I'm not really paying for it. Well, guess what? That will be on your credit report. Some bank or financial institution or broker may allow you to exclude it, to remove from your DTI, but most time you have to show proof, like the person using his check or her check to pay those payment from their own individual account. Shouldn't be joint account, their own individual account to make those payment. All those things were considered proof to show someone is only paying that loan and have nothing to do with you. Okay. Sometimes you may helping family member buy a home, and the payment for that, it could be also considered that too. But if you already have a home or you're helping someone buy a home, you may not longer be eligible for first-time home buyer programs of those kind of things. So any 401k loan, if you have any 401k loan, because we're going to ask for your most recent pay stub, we're going to see if you have a loan on there. So your 401k loan, just be honest to let them know. How about loan with your friends? You will borrow some money from your friend, you're going to pay them back maybe in a few months or a few days later. Those things you probably don't have to let the bank know. If you do let them know, they will put into the calculations, but they also may have to ask you for a contract to show what's your monthly payment, when you need to pay them off, all those things. It could be a lot of work, but if you're very small loan, you're gonna pay off very fast, or just pay it off, you may not need to tell the bank that or financial institution that. Or you can always check with your banker as well. Now, you need to add your expense, your new mortgage payment. So you can remove your current payment for your rental, but you need to add your new mortgage payment. You can download a lot of mortgage application on your phone, and they can calculate payment for you. The payment, for example, you're going to buy a $500,000 house. you're going to do 20% down payment. Um, so that will be 100,000. You're going to borrow $400,000. Okay. And then you can put into the calculator and they will tell you what's your principal and interest payment look like. Now, tax will be based on your purchase price, depending which county, state, and or the area you are. The tax may be different. For example, Southern California, most places are 1.5 of the purchase price. But easy way, go to Zillow, Redfin, all those things can help you to determine what property tax look like on a monthly basis. Your insurance, most time, even $1 million, $2 million home, maybe close less than $1,000. It depends. So your monthly payment maybe 80, $100. So you can kind of just add that into it. Any other expense that could be calculated. HOA, homeowner association fees. It depends where you buy. Some area do have HOA. Most on condo, townhome, those area will have HOA. But for example, on Irvine, California, then they will have a lot of community have HOA fee. Then you need to add it in there as well. Mortgage insurance. If you pay less than 20% down payment, then you will have mortgage insurance. Sometimes could be one lump sum payment one time when you do your loan. Some of it will be monthly payment thing. If you are doing the monthly payment, then you need to add it in there. Again, we talk about co-sign loan already. Does it count? So if they can prove it, sometimes can be removed, but just think it will be count in your expense. So now, what's your income? The income, sure, for example, your W-2 income, if you're self-employed, then your income, you report it. Stocks, dividend, they can consider your income. Other possible income will be if you have any type of rental property or any type of rental. Investment property, sometimes they will take those in, but normally not 100%, 70%. Same thing for stock. Sometimes they may consider those income less than the actual you reported. Okay. If you waiter or waitress, you may have tips, but you just need to remember if it's not on your tax return, it doesn't count. So sometimes you need to talk to your accountant and to help them to not write off so much stuff. You kind of need to review those things. So what DTI do you need? It depends really on the base program. There's multiple program out there. The requirement may be different, but most time your DTI for me to talk to my customer are normally 43%. But some places lows 40, highs 50, some could be 60. It depends the relationship sometimes you have with the bank. So let's say you have a lot of account with the bank or your business accounts with the bank, then they may make exception because some loan, which we can talk about later on, it could be sold or could be kept in-house for the bank. And sometimes they will allow the DTI to be higher than what normal allows. There's a good article called How to Buy a House with Low Income on MSN. You can search with that too as well. So how much down payment do I need? What else do you need besides down payment? Okay, so you can do more than 20%. You can do almost zero down payment in some program. So I list out the program from here on top. You can see from the slide, like Federal Housing, Federal Nation Mortgage Association, and the Federal Home Loan Mortgage Corporation, Department of Veteran Affairs Insure Loans, United States Department of Agriculture, Department of Housing Loan. Those things have different down payment requirement. So for example, VA, I understand they can do 0% down payment or pretty much no down payment, as you can see. And there's a lot of grant offered by city, county. You can check with your city and county and even your state. And also financial institution or nonprofit organizations a lot of them offer grant as well to help first-time home buyer or people want to buy a home at certain area. Okay, so what's the downside if you do less 20%? Well, if anything you do under 20%, a lot of time you will have mortgage insurance. So what's mortgage insurance? Mortgage insurance basically is the insurer cover the lender, not you, the lender. Okay, so let's say you cannot afford your house anymore. Your payment is way too high for you. You're going to foreclose your house now. You have no choice. So the insurance will kick in. Sadly, it doesn't protect you, but as a lender, let's say I sold a house, you bought a house for 500,000, I only able to sell the house for 300,000, you owe 400,000. The 100,000 differences will be covered under mortgage insurance to pay the lender back. So in a good part, you don't own any more of that money too. But the bad part, the downside, is that you lose your home. Okay. And anything under 20% down payment can increase your reserve cash. What's reserve cash? So beside the down payment, bank want to know if you have more cash or not. And normally they want to calculate amount, how long you can hold. Let's say you lost your job today or some major change in your life. So then they will use this calculation. Your principal, interest, tax, insurance together times whatever amount they need. Some will be 6 months, 12 months, 36 months. If you do 20%, normally about 6 months. Sometimes they may not even require that. But if you do less than 20%, most time either will be 12 months or up to 36 months. So there's good news and bad news. The good news is that your 401k, your retirement, all those things can be considered is your down payment as well, but also considers your reserve. So you may not need to be in your in your checking or saving account. But the bad news is that those money, if you do take it out from your 401k, it's going to be taxed or penalized. Okay, so you always want to count. If you try to save for down payment, you might want to do a little bit more as well. For grants and loans, sometimes some places require payback. Some banks, their grants, you don't require to pay back. But some of them, if you sold your house, for example, there's a city of LA or Rosemead, I believe, they have program they may require you to pay back if you sold a house inside 7 years. Some of them may request you pay back, doesn't matter how long you live in the house, but you need to pay back. Some require you have a monthly payment, some require you just pay back when you sold your house. Now let's talk about source of down payment. What can be considered your source of down payment? Gifting. A lot of people ask me about gifting. Can you accept gifting? Yes. Sometimes to a certain percentage. Most bank only allow certain percentage. Some smaller bank or different program, they may allow up to 100% down payment as gifting. You have to check your financial institution or your lender to see what program fit you best. But don't forget, some allow 100% gifting, they may affecting your rate, which we're going to talking about mortgage later on. I think so will be in chapter 4, because chapter 3, we're going to talk about FICO. Okay, so cash. Can cash be down payment? For sure, cash can be down payment. But if you're going to take out cash straight from your under your pillow, maybe not, because bank will want to trace it. When we say trace it, where's your money come from? So if you really have it under your pillow and you say you save it over the years, unfortunately, you cannot prove it and bank will not accept it. So then you either have to come out different down payment or you may give up your house. Okay, but if any money inside the bank more than 2 months, sometimes the bank may not see 2 or 3 months. I probably will be safer. Most bank will not ask you any statement longer than that. So if you have the money in there 3 months ahead, bank may not ever check, see where that money come from. So if you do save your money under the pillow, you may want to think about, get that money into the checking account fast, okay, or your saving account. Can your 401k be your down payment? Yes, definitely can, but you just need to check with your CPA on the tax rule, how much tax you need to pay on your income tax going to increase or you have to pay. Savings for sure. You allow money in your saving account, you save a lot your CD, all those things, yes, it count. Your stocks, yes. But the thing is, sometimes the stock market goes up and down. You may have to sell before anything. So you cannot say I have $100,000 in stock and that's my 100,000 down payment because they may go up and down and then you may not have enough of money to be your down payment. Okay, so you gotta make sure. So what should I do if I'm buying a house? I normally do is, or I suggest my customer do. If you have a down payment, maybe keep it simple. Use one primary bank and have very clear transaction all the time in your account. And put your money ahead about 2 months, 3 months. Try to not to deposit any surprise cash or anything like that, and even check sometimes. So what does that mean? For example, my sister was buying a house and she got a refund from Macy or something for $40. And the bank even asked her, say, I want to see your deposit for that $40. My sister's like, why? That's nothing to do with my loan and my down payment is more than that. And why you still want to see it? Well, the bank just want to make sure you didn't borrow from money or from anybody. Yes, even for $40. So sometimes if you have a clean, nice statement, that really keep your loan officer happy. Okay. Time for purchase. How long should be advanced and prepared? Really up to you. 6 months, a year, 2 years, 3 months, 4 months. Long as you have your money ready. So you want to do first set goal when you want to buy the house. Time frame when you can get the money ready, when you can build up your credit, when you have the credit to buy, when you pay down your other loans to keep your DTI down, uh, understand the area you want to buy, make sure where you want to buy, what's their price value, how often they increase their equity increase, or their purchase house price increase. Those are going to help you to determine down payment that you needed or assistance program you might need to give you that boost to help you to make your goal. Okay. But remember, house price go up and down, so sometimes may not be good to rush. We can talk about that in a different episode that I planned for it. Okay. Uh, so yeah, research area. What's the tax fees, everything out there was out there for it. What's the cost? Okay. And make sure you're ready. When I say make sure you're ready, don't just save enough for your down payment. You gotta make sure if you buy like me, I didn't buy a brand new home. I buy people owns the house before. So the house, it could cost me it cost me extra $20,000 after I purchased it right away to just do some fixer upper. And I didn't fully remodel. I just do most fixture up close to be 20,000 with brand new air conditioning unit, other thing. Because if you want to buy a house in a good district, and a lot of time they may not brand new house, especially in Southern California. But if you go to a different state, like my sister in Idaho, then they have a lot of brand new building. Then that could be different. But you need to think about buying the furniture. You need to think about the curtain you want to pull on to your window. All those things could cost you a lot, especially everything is so expensive right now. So you need to calculate that. You need to prepare extra money for that. And are you ready to take on this responsibility? This big giant responsibility, because it's going to be loan, could be 10, 15, 20, 30-year loan, depending on what you do. So you're going to carry a huge payment for most of your life. Okay, are you ready for that? Sounds scary, but it's great to own a home. You can do a lot of different things, as I personally do. Sometimes I fix my house myself, so I feel really, really like it. So that's one thing I like. Spend time with my house, do some fixture, or some myself do remodel. So nothing as once you feel you're ready, working with your banker to understand what's pre-approval pre-qual, which I'm going to talk about that later as well. You need to working with banker also know how much you can afford and how much your income to can support. And then you probably get some increase on your job too, so you calculate that. If you're self-employed, then you need to let your CPA know, make sure they report properly, didn't write off too much for you, as a lot of time a CPA will do the best to help you save on tax, but at the same time, you may cost you to do a large purchase. So thank you so much. I hope you like this. And if you like, please hit like and share. And I'll see you in the next episode. Thank you. And you guys have a good one. Thank you.